Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. Trouble pulling the trigger. You don't have to have it all figured out to start a new trade. It's something that you have to really keep in mind when you're approaching the markets as a whole, because realistically you can get so quickly lost in finding the reasons for a trade and or the reasons to skip a trade, that really it comes down to more of an understanding of the probability of the situation, and that's where you gain the confidence, right? That's where you can look at it and say, okay, well, I'm taking this trade, I've only got a 40% chance of success, so realistically I'm not going into that trade thinking I'm going to be coming out as a winner, but I am prepared for the loss if it happens, and if it does turn into a winner, then my reward should be twice as much as my risk, and everything's all hunky-dory, right? But you've got to really accept that probability of the situation before you actually place the trade, and accept the trade for the reason that you took the trade. If it's no longer following a pattern, if you were looking for a wedge breakout or some type of pattern and it's failing, use that information, accept the loss that the trade is failing, it's not doing what you wanted it to do, and then from there you can move on, continue on, find the next setup. So if you couldn't tell already, this is definitely more of a talking head kind of video rather than a charting video, because we're covering a pretty big topic. We're talking about trouble pulling the trigger. You know, we always kind of jokingly say it's really easy to get into a trade, just slap the button and there you go, you're in the trade, easy peasy. But when you're in the heat of the moment and the market's moving around a lot and there's all these different variables going on, it's really easy to get lost in the analysis, and all of a sudden analysis paralysis kicks in, and now you miss the trade and you're looking back with FOMO, and then you place the trade way too high and you chase it into the top, and then you get stopped out at the highs. So there are really a lot of major factors to consider that could be causing some roadblocks. One of the big ones is the strategy that you're trading is new to you and you're just simply not comfortable with it. You need a bit more practice yet, a bit more screen time under your belt, if you will. And there's nothing wrong with that, but when you're a really big giveaway for this, just as a side note, a really big giveaway is when you're going through the trade setups and you're looking for a specific pattern or a specific thing to happen, whatever your trade setup happens to be, and then there's some confusion when it's actually happening. Like, well, wait a minute, do I draw it from here to here, or what was that supposed to be again? Or, ooh, I'm not sure about that. What should I do? If you're asking those what should I do questions, chances are it's just a newer strategy. You need a little bit more screen time with it, a little bit more practice. It'd be better in that situation to be on a sim account practicing so that you're not risking any real money. Or if you're really dead set on using and utilizing the emotional gains that you get from trading in a live market environment than trading on a micro account or trading one share of a stock at a time or something really, really small. So that way you're very detached from it. When you lose $20, big deal, right? It's not going to be an emotionally shattering event like losing your entire account on a bad trade. Another major factor to consider is that the risk on the trade is just too large, and it's causing this emotional connection to the trade that there shouldn't be. Now, I know we're not machines, right? We're going to be imperfect in different ways. I get that. But when you're going into a trade, before you've even hit the trigger, you've got to accept the fact that that trade could turn into a loss. And what you're risking, if you're risking $100, you've got to be okay with losing that $100 if you're wrong. And that's got to be something that in your mind is there and you're okay with. And if you're not okay with it, you can't pull the trigger. I mean, you can, but there's going to be too many emotional connections. You're going to run into a lot of issues where you're not making decisions based on what you should be doing in the technical sense. You're making decisions on what you want to be doing based on your wallet or trying to save your wallet if it's going against you. And that's what can cause those really big problems, is just having that emotional connection. The way that I like to look at it is, if I were trading this with dividing it by 1,000, right? If I were risking $10 a tick, well, what if it was only a penny a tick? Would I do the same thing? Right? If I'm looking to trail my stop because a trade's working in my favor, woo. If I'm looking to trail my stop, why am I? Or is it the emotional side of me saying, hey, knock on the shoulder, lock it in, right? Lock in that bit of cash. That's what you've got to really be careful of, because when you're trading on an emotional aspect, you're going to make mistakes, and that's just how it works. There's nothing you can really do about it. Another fairly obvious one is trading with no strategy at all, kind of shooting at the hip. A lot of brand new to the market traders will go through that, and I think everybody kind of goes through that a little bit. You load up an indicator and you think, oh, easy peasy, the MACD crossed, buy it. It's not that simple, obviously, and anybody who's traded for longer than a couple seconds knows that. But trading without any strategy at all and just shooting at the hip and hoping, it might work for a short period of time. That's how probabilities work, right? When you're risking a huge amount of money, which a lot of people who are shooting at the hip, they don't know it yet, but they're effectively risking their entire account. So when they're in a losing situation, they don't know what to do. They don't exit at the right place because there's no plan, and then the account's gone. So usually what that looks like is, for a long period of time, because the risk is so high, it's win, right? They're stacking wins all over the place and building this gargantuan account until that one comes around and takes it all back, right? It cuts it off at the head. And that's what happens when you're trading without a strategy. It always will come back to bite you. 100% guarantee, and there's not many guarantees in the market, but trading without a plan long enough, that's one of them. Another really good one would be coming off of a bad day, a bad losing day, or a bad week, or a bad month, or a bad losing streak, or maybe something at home is going on. It's not like we're in the middle of a pandemic or anything. There's a lot of factors externally that can come into play and really mess with you. When you're coming into the markets with other distractions, right? When you've got other things going on that are really drawing your attention away from it, if you aren't able to focus in on the task, in this case being trading, because you're always being sidelined by that distraction, you're way better off focusing on the distraction and taking the distraction out so it's no longer a distraction. Because when you're trading, when there's other things happening, whether it's a bad losing day and you're mentally just kind of beating yourself up, or you just had a really bad argument with your SO or whatever, something like that is going to mess with your head, and you're not going to be 100% focused. And when you're not 100% focused, honestly, you would be better off. You'd probably take less losses if you just didn't trade that day and fix the problem rather than trying to force your way through it. And then the last one, and this is a big one that a lot of people run into at some point. I think everybody goes through this block, and that's trading from the I have to make money mindset. When you're trading from the have to make money mindset, you're trading with scared money. You're trading with an emotional state. You're trading to make an objective, in this case money, and you're, by doing so with that objective of looking to make X amount of dollars to pay a car or buy a Ferrari or whatever, I don't care, but you're putting a monetary value on it, which emotional attachment, right? It's the same thing. You're linking yourself to that mindset, and by doing so, you're trading out of fear, not out of strategy. When you're going into the market every day with, like, oh man, my rent is sitting over my head. I've got to make my rent payment in 3 days. I don't have enough money for it. I've also got to pay for XYZ. We've got groceries, all these different things. When you're coming into the markets with that in your mind, you're going to make your day worse. I promise you, because you're going to be trading out of fear. You don't want to give any money back. Like, my job, I'm here to make it, right? I'm not going to give it back. Well, you're not going to take any risks, or you're going to take the risks and then immediately cut out of the trade, because it's one of those situations where it's scared money. And if you're playing with scared money, you're not going to make any money. You're probably just going to give it all to the market anyway. So be very careful of that have to make money mindset. And I know if you're in that situation, it's really hard to take yourself out of that mindset. But realistically, if you're having trouble getting out of that, it might just be better to not trade that day, because emotions will creep up on you when you're trying to get the trade going. All right, well, that's going to do it. A little bit of a break from the mold from what I'm normally doing. I'm not, I don't typically do a lot of the talking head videos, more about the technical side of stuff, but this is one that, there's not much I can really show you on the chart, and it just makes more sense to do it this way. So hopefully you enjoyed it, and, didn't look at a whole lot of charts, but this is a really big topic. This is something that I don't know of many people, I don't know of any people who haven't had at least one of these problems along the way, if not all of them times 3 or 4. But that's going to do it. Like we always say, stay safe out there. Keep those stops in play. Let the winners run. Until the next one, we'll see y'all then. Thanks.